Welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. Surabhi, it was one of those days when everything that could go wrong appeared to go wrong for the markets. From the start, there were these negative noises on whether insurance bill will pass at all. That seemed the only sure shot. And then the SEBI rules appeared a tad too tight. And by the end of the day, we had been falling throughout the day, ended practically at the lowest point of the day, barring some last-minute short covering. And what is more, we didn't chime with the global environment at all. Other markets, barring very few like Russia and Ukraine, did actually better than us. So not one of those best of days.
Not really, not at all. And this despite the fact, as you mentioned, that global markets were holding up pretty nice and steady. We had enough of our own woes perhaps to deal with. Let's quickly run through the headlines. Markets lose ground as uncertainty over the Parliament session and SEBI's norms on P-notes trigger profit booking. The Nifty loses 0.8%. Mid-cap index cracks 1.5%.
ITC nosedives 6% as the Health Ministry proposes to ban sale of loose cigarettes and hike the age bar for buying tobacco products. Cabinet will now take a final call.
However, bucking the downtrend, BHEL was rising 3% as CITI upgrades the stock to a buy. Airtel was also gaining ground on divestment of its towers in Nigeria to American Tower Corporation.
Right, those are the headlines, and here are the experts that we have lined up on the show for you today. Market perspective from Sanjay Dutt of Quantum Securities, and we'll also be joined by Dilip Bhatt and Sri Shankar from the sidelines of the Prabhudas Lilladher Small and Mid-Cap Conference.
Before we get you all that opinion, let's straight away get to the day's trading action. The bulls finally decided to take a pause and catch their breath as the recent steroid run finally came to a standstill. Anuj is here with the details of really what transpired today. Anuj?
Well, a tough day for market, but not really unexpected. There were some concerns about the Parliament session, about the SEBI issuing a circular on P-notes, and in general the market had run up a bit too much, and this is expiry week, so there were some concerns, and the market actually sucked a bit today. Though to be fair, it's the mid caps which bore the brunt more. The Nifty actually was quite okay. It found support at 84.50 and closed at 84.70, which is really powerful course for a market like this. But for the mid caps, there were big cracks today. In terms of individual stocks, of course, today's big drag was ITC because of the news on the government potentially banning sale of loose cigarettes. So that was one stock that dragged the market quite a bit. Apart from that, you had drag from ICICI and L&T as well, and banking in general didn't do too well. On the other hand, you had support for the market in terms of ONGC, the HDFC Twins and Reliance. So things were quite okay for some index stocks. But in the mid-cap space, you had big correction in high beta names: Unitech, HCC, JP Associates, India Cement, and that's one space which still remains vulnerable to further correction.
Well, absolutely point taken, Anuj. Actually, there was definitely a pattern in the way the market sold off. Risky assets sold off, basically. So the worst cut came in the realty index, minus 3.5%. Let's ignore FMCG for the moment because it largely got dominated by ITC. The PSU Bank index took a 2.2% knock. Infra index, the CNX Infra, took a 1.6% knock. Power took a 1.6% knock. And Nifty Junior, which is a group of the Momentum Boys, took a 1.5% knock. Even if you looked at the individual stocks, it was the ADAG group, Relcom, Rel Infra, Rel Power. Those stocks were big losers. The JP group, groups which have some problem in their balance sheets. So JP Power, JP Associates were among stocks that lost. And among the infra stocks, HCC lost, Gammon Infra. We know the problems in either their balance sheet or their P&L, or both, and all those stocks lost. And of course, realty also bore a bit of the burden. There was also decent amount of profit taking in stocks that had run up through the year. So stocks like Indocount Industries, which have given multi-bagger earnings, were also stocks that saw a decent amount of profit taking. Well, that was what the day held for us. But time for some market opinion. Sanjay Dutt, director at Quantum Securities, says actually the market may see a good correction before January, and he sees the base for the Nifty at 7,600 to 7,700 levels. So actually, not even he wouldn't be surprised with a 10% cut. Hear him out.
My sense is that the prices have definitely run up ahead of the fundamentals, what you correctly mentioned, and the probability that we've touched the high for the year, for this calendar year, I think it's about 70 to 80%. To make it very simple, I think from now on we probably would see a reasonably good correction before 31st of December or the first week of January. This is a long-term bull market, but it's going to be a rocky ride because you've seen a one-way rise from the lows of about 5,000 levels to 8,500. There will be pullbacks, and that's the time when you keep adding on to your favorite stocks. I think the floor would be 7,600 or the 7,700 level which we saw a few weeks back. I think a good shakeout is in the pipeline. Now, whether it happens before 31st of this year or whether it happens sometime around middle of January, but I think we are all everything's pointing towards that. All my indicators are pointing towards that when I look at the markets. I would be my priorities would really be oil and gas, banking, engineering, capital goods. These three I would be aggressively long if I get an opportunity.
Okay, keep buying quality whenever you get the dip. That's the advice coming in from Sanjay. Let's move on now to all the cues that we're getting from the futures and options space. Varinder Bansal is standing by. Varinder, how does it look?
Well, it's scattered all over and it will be volatile. I can promise you that for the next 2 days. 8,400 put, if you just look for December, there was some buying which was seen and the premium was going higher, clearly suggesting that the market participants are watching out for lower levels, and call writing, which was earlier happening at 8,600, has now shifted down to 8,500. As I said, there will be volatility, but no signs that expiry could happen over 8,500. So watch out for that. ITC was clearly the stock of the day. It was down only 4.5%. Fresh shots seen over there. The entire real estate pack was under pressure, whether you count on Unitech, Indiabulls Real Estate, SDIL. You saw all of them cracking with short position building up. Entire JP Group stock was under pressure again. JP Associates, JP Power, both down nearly 8%. Fresh short seen even there, whether you count November or December series. Hindalco had a smart move. If you just see the intraday move, the stock actually recovered nearly 4% from those lows. There was some short covering which was seen in that stock. BHEL, you like me or not, but BHEL is one stock, which just moves up, was up nearly 2.5-3% on that Citi node. There was some addition on the long side in December series. And watch out for HDFC Bank. That will be important to watch out tomorrow. Nearly 1.3 crore shares were traded on BSE FI segment, which means over 1,000 crore of trade only on HDFC Bank. Now that MSCI overhang is over, let's see how it trades. But there was clearly some buying which was seen on this stock and some long build up in December series as well.
All right, Varinder, Anuj and I were also referring to those high-risk JP Group and ADAG Group taking a knock. But before we let you go, also take us through the movers and shakers of the day, some of the smaller stocks that you normally have an eye for.
Lata, I heard you mention about some of the infra stocks, but there are few infra stocks which actually recovered quite, very, very smartly from those lows. Look at Man Infra. That stock recovered nearly 20% from intraday lows. NCC actually recovered nearly 10%. Crompton Greaves, if we are looking at some of the mid-cap stocks, it recovered nearly 5%. Hindalco, I mentioned, it recovered nearly 4%. But also Dr. Reddy's and Cipla and the large caps recovered nearly 3 to 4%. Jindal Saw, Dish TV, both of them recovering nearly 5% from intraday lows. So there were few stocks in the last half an hour who were seeing some buying happening in. All the cigarette stocks we have been mentioning about, so I will not talk about them. But some of the high debt companies, again, India Cements, Unitech, HCC, all were down. Some of the late mover stock which have fallen down the last half an hour. Automotive Excel, the results were superb, but the stock was down in 10% because it already ran up yesterday. Patel Engineering, Marksans Pharma, Oswald Chemicals, all were down 7 to 8%. Watch out for SC Investments. That is one stock in that microfinance space. Huge volumes today, around 20 times 10-day average. Stock was down 20%, something cooking there. Kesoram Industries, High-Tech Plus, all of them down. Few stocks which are still strong and some buying which was seen. Future Retail, JK Tire, Dabur, Amrutanjan, all of them were up anywhere 3 to 4%, even if the markets are falling. DCM Shirra was up 7%, Atul Auto was up nearly 5%, and Balkrishna Industries, the stock which fell actually 25% in 2 days post results, saw some buying today up nearly 3%.
All right, thanks a lot for that exhaustive list, Varinder. But the headlines were quite clearly captured by ITC. In fact, stocks of all cigarette manufacturers stumbled in trade today after the Health Ministry informed the Rajya Sabha that it has accepted the recommendations of an expert panel which has proposed a ban on sale of loose cigarettes, among other measures. Pragya Bharadwaj now joins us with the details. Pragya, tell us the recommendations, but more importantly, the likely impact on biggies like ITC.
Well, you know, the question that the street will ask is the kind of reaction that we saw on stocks like ITC, VST Industries and Godfrey Phillips, was it even warranted on the news that came out? I'll take you through the news. The news that spooked the markets today was that the Health Ministry has accepted the recommendations of the expert panel. Remember, these recommendations were submitted to the Health Ministry in September 2014, and now there will be a draft note which is circulated at the cabinet level to actually impose a ban on the sale of loose cigarettes. Today's news, you know, simply put, just means that the overall recommendations have moved now one step forward at the cabinet level. Of course, we have to see if anything actually comes out of it. Just to take our viewers through what these recommendations are, some extremely stringent things that the recommendations speak about. One being the fact that the government wants to put a ban on the sale of loose cigarettes. They also want to increase the legal age for cigarette and tobacco consumption. There is a lofty fine of 20,000 rupees which they want to impose on public smoking. The government wants to put a ban on any kind of ad and promotional activities on some of these cigarette kiosks. They want to make public smoking a cognizable offence. More importantly, they will put some stringent violations on any company that actually violates all of these kind of pictorial warning and those norms. And more importantly, they want to make these pictorial warnings cover almost 80% of the cigarette surface area on all of these packs. What the analysts believe that a lot of these proposals may not be enforceable on a practical basis, because, you know, a lot of these cigarettes, especially on the loose sale, are sold via mom and pop stores, the kiryana walas and the pan walas, etc. Difficult to monitor even how many stores that we have. The number could range from 1.5 to 4 million retailers. So it'll be difficult to gauge and put that kind of machinery into place to curb the sale of these. Both sides of thought that we have on the volume impact that could have. Since the ticket size comes lower, it could actually the government could achieve its purpose. And on the other side, since the overall ticket size of what is being sold increases, there could be that volume spurt that these companies could see. But definitely what remains to be seen is that despite strong fundamentals, this kind of negative news flow from the Health Ministry will remain the Achilles heel until we go into the budget for companies like ITC. Today was just a testimony of that. Back to you.
All right, Pragya, thank you for that. So ITC definitely taking a huge knock, at least sentimental impact, very, very evident today. Let's move on to another development that impacted the markets today. This was, of course, news coming in from SEBI, or the Securities and Exchange Board of India, which has announced that a foreign portfolio investor, or FPI, can issue offshore derivative instruments comprising mainly of P-notes only to those subscribers that do not have an opaque structure. Now let's hear out what experts make of this and how this might actually impact market sentiment.
The circular, the way we interpret this, is in one sense trying to align the requirements for a direct access as an FPI versus an indirect access through ODI. And to that extent, I think it's created kind of a level playing field. And while doing so, it has obviously eliminated certain ambiguities and flexibility which existed for ODI investors.
They've tightened the definition of regulated entities. Earlier, ODIs could be issued to regulated entities, which pretty much meant anybody registered with any securities regulator, etc., or equivalent. Now they have narrowed that to only those bodies who are regulated by specific entities, which is the restriction in the registration as an FPI, which is those countries need to be signatories of MOU, which is known as an IOSCO MOU.
All right, so that's the interpretation of SEBI's strictures. Time for a break now, but coming up, more market perspective. We'll also get you some trading ideas for tomorrow.